Good afternoon, everyone. This is Ken Huggendubler. I'm a partner in the insurance industry practice leader with Baker Tilly and one of the co-committee chairs of the PAMIC Financial Management Committee, along with Scott Esworthy from Brown, Schultz, Sheridan, Fritz. And we wanted to welcome everybody back. Hope everyone enjoyed the morning sessions. Again, many thanks to Missy Greiner and Tony Latini for their presentations. This afternoon, we're going to take a little different look at some different subjects, and they are all related to cyber and IT, particularly in the current work at home model that most and many of our companies are working in right now. Thought it would be really important to take a look at some of the work from home issues that companies are having from a technology perspective, and then also look at an enterprise transformation perspective. A lot of companies were heavy into enterprise transformation, looking at customer experiences, automation, and data analytics, as well as all the cyber issues. So this afternoon will all be about IT. Just some reminders for a CPE perspective. If you want to get CPE, make sure you're answering the question or you will not get CPE. I really want to thank all the sponsors. You're seeing them roll on the screen there. It's tough to be a sponsor in this environment right now. We know a lot of companies have cut back in sponsorship, so we really want to thank all of our sponsors for really making this event happen for us. And then just a reminder, this is being taped. So this is available on the PAMIC website, and you will get a link to it sent later on. So with that, I'm going to introduce our next speaker. So we're going to have a roundtable. I'll let the speaker I'm going to introduce those participants. But our first speaker is Phil Schmoyer. Phil, my friend and colleague from Baker Tilly, he's a senior manager out of our Philadelphia office in our risk, internal audit, and cyber practice. Phil has been specializing in that area for over 10 years. He also has worked at a large multinational insurance company, but specifically over the last year, I've tasked him to lead our data analytics and InsurTech effort at Baker Tilly. So that would be really good for him, as he's got a really broad sense of what's going on in the IT environment to lead our panelists. So with that, I will introduce Phil.
Awesome. Thanks, Ken. Appreciate it. So welcome, everybody. Unfortunately, I didn't have the opportunity to join this morning. I've been in the middle of a move, and so internet connectivity is scarce, to say the least. But happy to be with you this afternoon. Unfortunately, you've got about 2 hours with me. I'm graced with the presence of a few others for the first hour, and then we'll talk cyber and emerging regulations and some impacts of COVID in the second hour. But wanted to introduce high level the three panelists we have here with you today, and then kind of kick it over to each one of them to give a little bit more background on themselves, as well as some opening remarks, for lack of a better term. To bring kind of everything to light of what we're seeing in relation to COVID, what we're seeing from a trend or an IT technology enhancements as it relates to that. So first on the dais here is Britta Schatz, who's the CIO at Penn National Insurance Company. After Britta, we'll kick it over to Bill Connors, who's the president at Formotiv, an InsurTech out of the Philadelphia area. And then lastly, from an opening remark perspective, will be Simon Oddy, who's a partner with the Baker Tilly Global Forensics practice, who does a lot with insurance companies, damage evaluations, and everything like. Also, kind of pioneering our InsurTech efforts internally at the firm. So Britta, without further ado, do you want to give a little introduction and a little bit, maybe what you're seeing and what's your biggest takeaways from how you're seeing COVID impacting your business?
Okay, so I'm Britta Schatz. I'm the Chief Information Officer at Penn National Insurance. I've been with Penn National for 18 years, and I've been in this role for 9. So I would say biggest takeaway for me has been the value of being prepared. So, having a plan and then practicing the plan has made all the difference for Penn National. And it's not just about a pandemic. We do have a pandemic plan. We do have a crisis management plan. We have incident response plans, business continuity plans. Having those written down and then practicing them on a regular basis, I think is really important.
Great. Bill?
Yep. So my name is Bill Connors. I'm the president of Formotiv. We're an insurtech that sells behavioral intelligence technology. So we essentially track and monitor how users and agents use insurance applications. I would say generally across the board, to echo what Britta mentioned, we've certainly seen those who were digitally prepared get ahead during the COVID pandemic, those with digital tools, both for their agents and their customers and a digital process. We've seen a major increase in the number of transactions versus their peers who are still primarily paper-based. It's the Satya Nadella from Microsoft quote of, hey, 2 years of digital transformation has happened in 2 months. And again, to echo Britta's point, those who were prepared certainly are coming out of this ahead of their peers.
Great. Simon?
Yeah, thanks, Phil. I echo Bill and Britta's comments, really. I mean, this year's been just incredible. My background is the damages analysis resulting from unforeseen events, and it runs the gamut, really. We're just getting through toward the end of hurricane season. We've got civil unrest across the United States. We've got, winter's upon us, so who knows what that will bring in this year. I'm sure there's something we haven't seen yet. As for COVID-19, as far as the damages as they unfold, obviously lots of discussion in the media about what will and won't be the response, or what will and won't the response look like from the insurance companies. A lot of litigation taking place, etc. But I think that it's the preparation and the ability to handle volume that I think has come really into focus. As of now, we're sort of skirting on the edge of that because of this litigation that's out there and how business interruption will or won't have to respond. But without a doubt, the clients we've worked with, I think if you go back to March onwards, the fear was, how do we deal with this volume if it happens? And at the same time, meet customer expectations, which are changing all the time. So that's the sort of current vibe and takeaway I've picked up on, this strange year so far. Yeah,
I'd echo all of that, and just really as Bill said too, the digitally native companies, tend to have the leg up. And connectivity. If you asked me back in March or April, not today has been a connectivity nightmare. But if you asked me back in March or April about kind of how did the nation really respond to the COVID, everyone work from home, I'd say, pretty well. The bandwidth we had and the infrastructure that was built from a technology perspective has been functioning rather well. You see, kind of the uptick in remote access and some of the VPN connections. And so, Britta, I was curious from your perspective, managing a large, company as you do from a technology infrastructure perspective. How have some of the challenges or the connectivity challenges impacted you, both from a people working remote as well as vendors and vendor working remote? A lot of connectivity aspects, I would imagine.
So we haven't been hit by too many issues. Of course, everybody's homes are different, and where they're located makes a difference. I'm probably a really great example. I live in Perry County. I live in the middle of Perry County. I still have DSL connection. We don't have cable or any really great broadband. But so for me, the answer was MiFi, and we do have answers. It works great out here, and we've solved all the connectivity problems that we've had for folks. Sometimes we're solving them with just simple reminders. Working wired is better than working wireless in your home, and if your kids are in the next room streaming, you might want to tell them to dial it back while you're trying to do an important video conference. So those kinds of things, but all in all, we have not had great connectivity problems.
Yeah, that's great. And the children and dogs in the background has become a part of work life now. It just kind of seems a second nature to have that. What I've noticed is, because of that, we as a team are actually, becoming more engaged with each other, learning dog names, learning family, learning, friends. What we're missing is that personal connection with the people, our customers. Bill, your team, this is kind of your sweet spot in terms of engaging with customers digitally and tracking, what they do, how they do it. Any thoughts in terms of what's been changing, or what are some of the trends you're seeing in terms of digital engagement?
Yeah, I would say the one thing related to our clients, which are primarily insurers, is the software development life cycle has actually slowed down for us, right? Just because people aren't in the office, they're logging into remote desktops. Some of our clients are a little behind the curve digitally, so our integration time has at least doubled as far as getting us through testing and out to production, just due to everyone being remote. As far as what we've seen, because we live on websites that agents are running quotes through and consumers are running quotes through, we initially saw a 50% decrease in volume, but quickly recovered, probably within the first 30 days after the stay-at-home orders hit. And for those who provided the proper digital tools for their agents and for their customers, have actually exceeded their pre-COVID levels, right? And across the board, every insurer we talk to is looking for additional data sources. They're trying to get straight through processing, instant decisioning. You look at the life space that we do a lot of work in. Of course, there aren't underwriters sitting in an office anymore waiting to manually review policies, and that is all getting replaced or augmented by computers. So those who are a step ahead and those who weren't are accelerating quickly to take that type of approach.
Yeah, and I think the world itself is changing from a transactional marketplace to something that's purely digital. I was in the grocery store yesterday and they declined cash. They had a sign up that they didn't want to have cash, and there's a coin shortage. They wanted everything digital. So I think we're starting to see that we're at the tipping point in the shift away from a lot of the personal interactions and tracking things digitally and being able to know your customer in a digital world. I think is going to be critical going forward. There was one question, or really it was a call out to Penn National, but I wanted to open it up for everybody else as we're going through. I'll be monitoring the Q&A. I forgot to mention this at the beginning. Please put your questions out there, your topics, your thoughts, and we'll certainly call them out and or have the panel respond. You can be anonymous, or as Jay did, indicate yourself to the panelists. But the call out was that Britta and Penn National, they do an awesome job with their IT support techs in terms of responsiveness. So congrats, Britta. You got the first call out on the panel. Simon, quick. Want to pivot back to you as well in terms of what you're seeing from a damages perspective. I know when Bill talks about kind of new submissions down 50%. What are you seeing on a claim volume perspective? You mentioned in the opening remarks.
Yeah.
But what's some of your thoughts in terms of the claim volume and or kind of what's some of the coverage aspects that are up for consideration?
It's interesting. So I'm going to split it into two, really. I'm going to talk sort of COVID claims and non-COVID claims, just the run-of-the-mill stuff that's happening every year, every month, and COVID doesn't stop that stuff. I'll talk about that first. Anything we're dealing with where there were damages to be measured that was open around about March 17th or prior. So in other words, the date of loss was prior to really COVID kicking in the United States. What we've seen since then is just a huge amount of pressure on us and the people we work with, the insurance companies and the loss adjusters and so forth. Just a tremendous amount of pressure to move those claims forward. A lot of that is driven by the fact that if it's an agreed upon claim, it's an agreed upon coverage, and it already existed prior to this, and now a business is facing whatever it faced from March onwards, the economic challenges. That's cash flow to them. And so our team has really felt that. So the immediate wave sort of mid-March onwards in terms of pressure on us, and therefore I know our clients, the pressure on them to take care of these issues has been tremendous. And I think everybody's just done whatever they can to respond to that pressure. on the COVID side, there's different. We do a lot of work internationally, and our UK colleagues are dealing with slightly more advanced stage of the COVID-19 impact than we are here in the US. So I know this week there's a big case, big test case that will determine some of the coverage that might exist for small business owners in the United Kingdom. So I think that decision is scheduled for either Friday or Monday. So that will be interesting to see. We've got clients that think they'll, win and lose some of the arguments that relate to that case in the United Kingdom. And so there will be the need to cover some losses. And again, it goes back to an original point. Their big concern is when that decision drops, that tap is switched on to full, right? It's not gradually turned up. Every one of those claimants is suddenly going to be knocking on the door saying, look, the decision's in, it's time to take care of this claim. So I think that's the sort of COVID environment. In the US, where we saw, March and April, lots of discussion about how the insurers would need to respond. I'm not a lawyer, and I've got to be careful to go too far down the discussion of what's covered and what's not. The language is nuanced. It's really for individual insurance companies to look at their own language and see what their stance is. I will say, and there's a bit of a plug for Penn here. There's, for the audience, if you want to go and look at a COVID coverage litigation tracker, there's a great site. You can probably Google COVID coverage litigation tracker, but it's on the University of Pennsylvania's insurance and legal site. It's tracking what's going on. 1,200 plus filings on BI coverage claims, etc. So they seem to be going in insurers' favor. I will say the decisions that have come out seem to suggest that this isn't a covered event. Again, that's beyond my area of expertise. I'm an accountant, not a legal brain, but we certainly in our group are keeping a careful eye on that because, like I say, I think it's one of these decisions that does go where there is a need to respond, and it's that volume instantly. And you've got small businesses that have been waiting, and it's the small business owner that's really under all the pressure, I would say, out there in terms of the COVID impact and having closed businesses and been furloughing staff and mandatory shutdowns and things like that. So, they see the insurance process as cash flow to them, and I think subject to these decisions that it'll impact, how we've got to be ready to respond. And it's being ready to respond, I think, is important at this stage.
Yeah, kind of piggybacking on Britta's opening remarks, where your plan and your plan to respond and how you respond really is critical. It's kind of the same thing. Can you get ahead of whatever that decision is? If there's an adverse decision, in the eyes of the insurance carrier, are you prepared to respond to the volumes of claims that are going to open the door? So again, like a pre-plan is always pretty critical. And with that, especially with the volume and some of the conversation we've been having here. Some of the clients I've been talking to, automation and kind of the use of data is kind of the new key and/or something that a lot of them are looking to invest into on the back of COVID. Kind of sounds counterintuitive, but investing into kind of the new digital while your premium volumes, et cetera, are potentially stagnant or down. Britta, any thoughts on that in terms of kind of either Penn National or what you're seeing from counterparts? In terms of investments in automation, and if so, kind of what are the areas that you're most concerned with or looking into first?
So I would say the first, maybe easiest part is process automation. If we've been paperless for a long time. I'm sure that that's true of many carriers. Robotic process automation has recently gotten a lot of attention. We use RPA. There are some great RPA tools out there, as well as third-party vendors who are ready to help with process automation. We've been very successful in applying RPA in our personal lines processing area. And we were a little surprised to find that we got value not only in terms of FTE savings, but also in terms of customer service and customer experience. So for our agents, we've been able to decrease the turnaround time for some transactions from weeks down to same-day processing. So that's been a really good one. More recently, since the pandemic, we've started to work with a company on e-disbursements. So we found that one of the areas that was not automated much for us was check processing. We still had to have people come into each one of the offices and print checks. So we started down the process of looking at e-disbursements, and we hope to be able to digitize those transactions more and limit our exposure there.
Yeah, awesome. And Bill, I know this is kind of right up your alley as well from the Formotiv side. In terms of things moving more digital, less face-to-face connectivity, knowing what your customer is and or isn't is kind of critical. Any thoughts, anything to add in terms of what you're seeing companies do and or yourselves in terms of trying to flag some of those fraudulent items and or just understand what the customer is really doing, acting digitally versus acting face-to-face?
Yeah, I think, with that dimension of information loss, which was face-to-face, life P&C providers are looking for new data sources. So in the P&C space, you're seeing a bigger investment in telematics, other alternative data sets. In the life space, you've got these insurtechs that have raised a lot of money who have essentially adopted a fluidless underwriting process, which some of the larger players are trying to quickly adapt to. So including things like EHR callouts, pharmacy checks and pharmacy data, all of that information to, again, remove friction, because suddenly for a period of time, medical exams weren't allowed. So people couldn't go to the home and take fluid tests, right? So that totally disrupts and changes the business model, but it's allowed some of these incumbent players to catch up to the Bestows, the Ladder Lifes, the Haven Lifes, and some of those others have invested. Most of them have reported in life 50% increase in applications, right? Once the pandemic hit, because of course, life insurance, uncertainty, I want to make sure my family is protected. We went back and did an analysis because we were thinking, okay, COVID, slowdown in the economy, recession, fraud was rampant from 2008 to 2010, especially on the insurance side with, as crazy as people torching cars, right? Because they wanted to get claims, and again, 50% increase. Okay, how can we step in and get involved on not only the policy opening side, but also on the claim side to understand, okay, maybe this application was potentially manipulated, right, to get the best premium, or maybe the claims description was manipulated. Why did they take so long through the process? And by using, this isn't meant to be a plug for us, but by using third-party data sources like an EHR technology, like pharmacy data, like telematics data, social media data, right? If there was a claim and suddenly someone's skiing or doing triathlons, that should raise red flags. So it's been great to see the acceleration in using these third-party data sources to help automate processes, but more importantly, make better decisions.
Yeah, definitely. Simon, anything to add? I know you're acting some of that. I want to just pick up on something Bill said there, really, is, in talking to some of the insurance clients we work with, the pressure they're under, again, small business, and it's been brought about by COVID, but it was a movement that was happening anyway, is speed, efficiency, and where's my money, right, is the policyholder's sort of mantra. As clients we work with move towards that, there's this risk, right, that if you want to speed things up, you're going to remove a couple of steps. So you might remove some of the validation of financial data, and there's sort of a trust and validate exposure. But it makes me think something there that Bill mentioned, is that's the client's fear, is we can move towards giving the customer the expectation they want, but at what risk? And if there's a risk that you're going to skip a step to speed things up, you bring in that risk of fraud that Bill was talking about. And it's making sure that if we're going to drop a step here on the processing of a claim, we've got something that's a backstop, if you like, to make sure that there's some discussion with some of the clients we've got that, they're wanting to move towards something we sort of see in the non-commercial space, that self-reporting claim submission, right? But in a commercial sense. So a small business policy owner can perhaps submit all his financial data directly into a portal or a web-based platform. It may be a tax return or some financial information. And really our role then shifts to being able to sort of validate that quickly and make sure, with people like Bill, that it's not been fraudulently submitted. And then we can get through that review process on that small business claim much, much quicker. So it's certainly recognizing that speed's important, but if you're going to remove a couple of the steps to speed things up, you've got to make sure you're filling it with something that just protects. And that's one or two clients' concerns is we've shown them some tools that we're trying to use to accelerate the claim evaluation. But one of the very quick first things they point out is, right, well, if you're removing that, how are you validating that the gross profit applicable to that restaurant that's been closed for 6 weeks is 27%, because are you just going to accept that because that's what he put into the system? Or are you going to trust and validate? Or are you going to build in some data sets that say, 27% for a restaurant is not outside the realms of normal. And therefore it's an acceptable data point. So just a shift in the way we're doing our work, and certainly clients are looking for us to explore how we can speed things up, but equally not increase the risk of fraudulent claims in the current environment.
Yeah, there's multiple facets to speed. Obviously speed is a good thing, but speed can also be a detriment. If you're processing incorrectly or you're not considering the right information, or the security aspect. I mean, in terms of just data creation and or adoption of technologies, we've got a doubling effect going on throughout the technology world. I think every 18 months, the amount of data that's created in the world doubles, which is just an insane amount of new data. And with that, and with the speed of adoption that COVID's pushing on some of these companies, it opens us up to also some security concerns. Obviously, some cybersecurity concerns. There's an upticks in phishing schemes and kind of emails coming out to all the employees trying to get credentials and information. Since there's no physical location anymore, everything's a little bit less secure over the digital world. Britta, any thoughts in terms of kind of the chatter that's been out there in terms of remote work security, and what you've seen kind of navigating those waters?
So phishing threats did go up substantially in March and April, and people are our biggest vulnerability. They things can get past them. So there's regular stuff that you do as part of the security discipline, and you want to make sure that you're ticking the box in all of those, that you have robust password requirements for everyone, that you're using multi-factor authentication for access to the corporate network, that you're reviewing and reminding people what your security policies are and how they can help the process. Dialing up training on phishing and social engineering it is important. Making sure that people know that they need to use corporate communication tools for email and messaging and video conferencing, and not using some of the free or personal software that they might have the ability to use, and making sure, of course, that you have the proper endpoint protection and monitoring tools running on your network. There's a lot to think about.
Yeah, and from an administration perspective, being remote as well, there's so much bandwidth out there that needs to be kept up. Lot of considerations and concerns, and I think in about 45 minutes, hopefully, I'll be able to shed some light on some of those additional items. Hopefully, but Bill, I guess from your perspective as well, I mean, remote security or work security, data security takes on multiple facets. Obviously, we need to protect it as IT professionals, but then you also need to trust what's coming in as well. Your group does a incredible job from a fraud detection perspective. Have you noticed any trends in terms of amount of fraud submissions and or kind of the additional kind of, fact finding or, other ways of going through trying to gather information both from a customer experience perspective and internal. Any kind of trends or anything you're seeing?
Yeah, I would say generally we're seeing, with the increase, we're seeing a lot more low intent users, right? So people who are just testing a process and going through a quote just to look at what price they're paid. And to Simon's point, right, this goes to, okay, we're going to speed things up, but at what cost, right? Yeah. So, hey, we want to speed up a process. We're going to spend all this extra money with all these other data sources to verify information. But what happens if that user's much lower intent than someone who actually, based on their engagement level in an application process, wants to bind a policy and become a customer? To Britta's point, the other thing that we found and we've started to shift over to cyber is if you look at, with everyone working from home, most of it is focused on endpoints and the firewall. Well, we've been approached by one of the large cyber players to say, hey, we need to start to take a look at the application and monitor what employees will typically do inside of a computer network and inside of the different applications that the enterprise provides, and then understand anomalies and patterns of risk or fraud in case an employee account was taken over. Because again, we can provide as much as we can at the firewall and at the endpoint level, but inherently at some point, you're going to get hacked no matter how good it is. So once they're in, if we can provide some extra layer of security to monitor what people typically do and then understand deviations and changes from that is a massive opportunity. So that's another trend that we're starting to see with this work from home movement.
Yeah, definitely. Using some sort of artificial intelligence or kind of the machine learning aspects of understanding what people typically do versus what they're doing today. You might be able to predict whether or not that account is compromised or not. And so great points from an internal perspective. Interesting thing I didn't hear you exactly say, but I inferred it. You can track employee behavior within applications. You can kind of assess productivity. And one of the things that I know we've been hearing from a lot of clients, as well as just out in the world, you see it. Productivity, it goes ebbs and flows, hills and valleys, through this COVID pandemic, where certain times there's a high productivity, other times there's no productivity, and trying to kind of bridge that gap and understand what that is. Kind of open it up to anybody really that has any thoughts. Maybe Simon, to get us started. I guess what are you seeing from a productivity perspective? Any challenges? Kind of engaging with both clients and internal personnel. Anything that you've done to overcome some of that? Because I know it's kind of not an insurance problem. It's a virtual work problem that everyone's facing.
Yeah, it's interesting. The impact we've certainly seen it have has been on some of the projects we've been involved with, and give you a very specific example. And I think our company encountered this, Phil. March, April, May, for our group anyway, was as busy a 3 months as we've had in a while because of the pressures I talked about with open activity and open projects. And then it tapered off, right? And I think I was talking to a colleague that talked about, COVID fatigue. People in the service industry sector, they'd gone through that sort of, I'm working from home. I'm at my desk by, 7:30, 8 o'clock, and I start work. I don't have the commute. And I'm a New Yorker, so that gives me an extra hour and a half, which is great, right? So I've got an hour and a half in the morning that I can sit at my desk, and then I've got an hour and a half at night that I can just sort of languish at my desk, when really I should have stood up, left the desk, shut the door, and gone and done something else. But I sit and I plod along with emails. So that's tapered off, and I think people have started to go. And it was interesting that we were dealing with a claim that was a service industry. It was actually a cyber claim, so it dovetails nicely with everything. It's a cyber claim, service sector. I think it was an architect. And they had seen those 3 months, just a bit like us, with phenomenal activity. But of course, in terms of the claim work we do and the damages, in terms of establishing the damages, there's a need to project what would have happened without the insured event, right? So I think the insured event happened in and around mid-April, a ransomware attack. And typically we would look back and say February, March, April, what's the activity level look like? And is that an indicator of what the future would hold? And of course, there was some debate because now you've got to look at this unusual March, April, May, or February, March, April period being, you know, out of the box, right? Something that's never been seen before and therefore might not be repeated. So we're certainly having to look at productivity in the work we're doing. It's slightly a tangent from what you're talking about there, but it's certainly coming into our world where we've got to pay attention to what's normal, right? What was normal in February, March, and April, is that going to be normal through the summer? Is it going to be normal next February, March, and April when we get into claims into the next, you know, calendar year? So we're certainly having to take a careful look at the sort of productivity impact that this event is having for claims that exist now and ones that will come down the pipeline in the future.
Yeah, we've actually even seen one insurance carrier out in the Midwest is looking to do some productivity benchmarking in terms of, you know, capturing the necessary data to be able to set a baseline of what's expected. Obviously, looking backwards is a little difficult to recreate that data sometimes. But trying to capture that baseline and see, you know, are we producing the same, or, you know, are we, you know, interacting the same way, you know, during COVID as we were pre? It's an interesting concept. We've kind of discussed it for a while, just in terms of, you know, how do we assess productivity without, you know, feeling like Big Brother, and monitoring everything that everybody is doing constantly. So it's an interesting point, interesting thought. I'm very curious to see how it goes from here.
And Phil, just to jump in, so we're, you know, when we initially set out to do what we're doing in the space that we're in, we thought, hey, we're going to go after the insurers and financial services companies that do the advertising on TV, the direct to consumer. We found a big market in looking at agent distribution and understanding agent efficiency and benchmarking agent behavior. So to understand, hey, who's using the tools and how are they using them, right? How often are they logging in? How quickly are they getting through the application process? Where are they holding up? Why do my top 10% of agents perform this way and use my tools this way versus my bottom 80 use it this way? And building training off of that. So we've actually started to do some of that with carriers because, to your point, with everyone being at home and just less visibility into what's happening, that's becoming a hotter and hotter issue for the carriers that we're working with to date. So that's something that we started to do, and it's been beneficial for most of the carriers that we're working with.
Yeah, it's the data. Data is key. Data is king. However you want to say it. It's if you're able to get that and track it and capture it, and be able to, you know, realize it and utilize it in a meaningful way, you know, certainly beneficial. Britta, any thoughts with that as well? You know, knowing your environment as well as, you know, the vast amounts of data that's being captured and stored.
You know, when it comes to productivity and working from home, I think that the corporate culture is really important. You know, this was not new for Penn National. We've embraced remote work for some time now, and most employees can choose to work at home 1, 2, or even 3 days a week. So, and our measures are performance-based, you know, so it's not just about showing up, and it's about the number of transactions that you process or the number of agent visits that you complete, or, you know, so I think that that's part of the productivity measure. Yeah, so it's, I think at Penn National, we've even seen an increase in productivity during the time that we've been working from home. You know, so I said I live about an hour west of Harrisburg, and you know, that to me translated into 2 more hours that I can work every day. You know, it's so easy to get to my office by 7 a.m. now, you know, and start to work. So yeah, it's different, and I think most people like it, and most people are seeing really great productivity enhancements.
Yeah, and I personally noticed kind of an ebb and flow with that as well, where, yeah, I'm in front of the computer earlier. I'm normally an early bird anyway, but I'm in front of the computer earlier. I can do more, but then I take breaks. You need to, now anyway. When I first started, it was, 12 hours in front of a screen, and you start to burn out. That's the COVID fatigue that really starts to set in. And we're noticing more people kind of, breaking here and there, but I honestly kind of believe this is, for a lot of organizations anyway, the new norm in terms of how they're going to conduct business. So, and wanted to plug the Q&A real quick. We're kind of wrapping up about 20 minutes to go here. Please submit any questions you have, any topics. We'll, kind of kick them around the team here. Wanted to get some thoughts on kind of the impacts that COVID is not having now, but will have in the future. And so, Simon, any thoughts in terms of, what's going to be some of the, the emerging or the outcomes of the, the kind of the COVID pandemic, not from a health and safety perspective, but more from a digital business perspective, both internally and externally, with our personal business and with our customers.
Yeah, I feel like I might be repeating myself, but it feels like speed of dealing with these small business claims is going to be super critical. Whether they're COVID related, as we will yet to see, or whether they're just traditional, fire, hurricane, whatever the claims may look like for small businesses. I think that we've seen the impact that just a few weeks of closure for a restaurant or a hair salon or whatever it might be, these small businesses that don't often get the media attention in this sort of business world that they've had in the last 3 to 4 months, right? But I think that, the need to provide a bit more transparency on their claims process, maybe give them some more control of their own claims process through digital platforms that I talked about. Maybe it's self-submission, a bit sort of a TurboTax for the claims world, really. You can submit your own data, your own documents, because you have it readily available. And then it's our role, as the accountants involved in these claim reviews to validate what's been provided. And I think with that, you can, if you think about it, you can alleviate some bottlenecks too. If you think that every claim submitted now has an individual, the claimant, who is sort of prepared to submit their documents, we at the other end don't have perhaps the bottleneck of labor issues or whatever it might be to try and figure out, well, I've got 1,000 claims to deal with, and they're going to have to get in a line, and there's a queuing system or whatever it may be. That's alleviated to some degree if we're saying to each individual that has a claim, hey, you can self-report, and we're going to use statistical analysis or some AI or some data to just validate much more quickly, a percentage of those claims and get them through the system. So I think it's going to accelerate that. I think, in our world as well, I think it's going to accelerate sort of the geographic footprint breakdown a little bit. I mean, we already work across offices anyway within Baker Tilly, but I think that'll accelerate too. I think we'll start. I've seen our team start to sort of change shape a little bit, less about who's located regionally near you and more about who's available, essentially. So just a broader work pool available to us. So as far as going back to the office, I'm not sure people will race back. I think, we've heard a couple of stories today about the benefits of work from home, ease of the commute, and maybe an improved mental well-being of being able to balance some time in the office versus some time at home. So we'll see. Yeah.
Yeah. Britta, Bill, any other thoughts in terms of kind of the new normal? What's next for the new normal? And what's kind of the next steps out of this?
I think the two things that we've seen, and one Britta mentioned, and that is whoever's been most flexible with working from home and has the corporate culture that is foundationally built on trust, right? Because with everything, the one benefit of working from home is hey, you have to take the dog for the walk, or you have to take the kids from somewhere. That could be in the middle of the day. But guess what? People are inherently online earlier and online later in the day. And there's, of course, and one of the questions that came in around people can ping you now any hour of the day, and it's less on and off and more infrequent as to how much you're working. So that's one major thing around that corporate culture of trust. The other thing is the speed to make decisions. We've been working with, and we know insurance carriers who have made fundamental and foundational decisions without meeting with vendors and third parties face to face. Right? When you talk about a top 10 insurance carrier rebuilding their entire CRM and distribution platform without face-to-face interaction with clients, right? That is a complete shift where in the past there may be systems integrators and people who come on site for a year in order to put that in place, and now it's being done remotely. So I think we're going to see this comfort with making decisions not necessarily face-to-face in a much more expedient manner, which I think is going to be good for everyone. It's going to accelerate digitization, it's going to remove costs from the process, and it's going to allow insurance carriers, financial institutions, utilities, some of those industries that tend to move a little bit slower, advance far quicker than they would have 6 or 12 months ago.
Yeah, and I'm noticing a kind of a trend as well. Just a lot of companies shifting cloud versus on-premises for some things as well. Just kind of the scale and flexibility to be able to do so. In terms of turning it on when we need to, turning it off when we need to. There's some questions that came in. A handful of things. Britta, I think you're a popular panelist. Some questions directed specifically to you around kind of the structure of the internet service providers for people in rural areas, and how you were able to do that from a cost-effective manner.
So, I think the question is around, in total, did we have to spend a lot of money to support a remote workforce? And the answer was no. We had, it's all part of the big discussion of being prepared. We invested in virtual desktop infrastructure. We've done that over the last 3 or 4 years so that people could work from home. It started for us as a business continuity issue. Whenever there's a snowstorm in Pennsylvania, we still have agents and customers in North Carolina that need to have someone to call. So we started investing in virtual desktop infrastructure so that folks could work at home on a moment's notice and be productive. And then that grew into the company being more comfortable with offering people flexible schedules and the ability to work from home. So when we began this business continuity event with COVID-19, we didn't spend any money at all, at least initially. Now, what we've seen since then is we have provided folks who needed it an additional monitor to work from home. We have provided webcams for folks so that they could participate in virtual meetings and we could see each other, but minimal investment.
Yeah, great. Yeah, and we've noticed, myself personally, I'm in the middle of a move, and Wi-Fi is kind of the must-have now. Some sort of internet connectivity. Without it, I feel paralyzed. Just in terms of not really being able to do anything. It's kind of sad. I mean, even my cell phone runs through Wi-Fi for the most part. So it's very interesting in terms of what's there. There was 2 more questions. One I'll kind of start to answer and pass off. One of the questions was from an HR perspective. How it just disappeared. But from an HR perspective, how does how can we kind of combat the COVID fatigue? How can we work on our mental health and wellness? Any kind of tools, tricks to help enable that. I know at Baker Tilly, what we've done a couple of times now, we've actually just implemented a couple more, is we give Fridays, a couple Fridays throughout the period as disconnect days, where it's essentially an additional paid holiday time off. we've noticed, no one was taking vacation or PTO. Everyone's working from home, and no one's going on vacation. They've got the kids have school from the living room. There's nowhere to go, and there's no really vacation destinations right now. So no one was taking time off. So we've created built-in disconnect days to force people to walk away from the computer, and the whole company essentially shuts down. So from a cost perspective, obviously there's a cost to that from the firm, but from a health and wellness, it's a nice perk for all the employees. I didn't know, Britta, anything that you're seeing or you're doing to try to combat the COVID fatigue or the productivity issues?
I can't think of anything in particular here in terms of a tip, but I would say that our management has acknowledged that these are unique times for everyone, and parents who are trying to help with their children's educations, and taking care of elderly parents is difficult. And so there's a real relaxing of the acknowledgement maybe of the that everyone has a unique situation, relaxing of the rules that you have to be available during core hours, and people are encouraged to work on a schedule that fits. We want everyone to be successful, both personally, healthy, and successful professionally.
Yeah, that's a good point in terms of the kind of the flex schedule. I know we have an individual on our team that only works at night, nights and weekends, because they've got kids at home, sick kids sometimes, parents that are there taking care of. There's just a lot of different aspects. Bill, I think from your team, working very digitally and from a quote unquote startup perspective, a lot of your people are working kind of probably flex time and all remote. Been doing so for a while. So anything you found that's been helpful to kind of manage the day-to-day schedules of all the employees and or people?
Yeah, we given being where we started a year ago and prior to COVID, we were face-to-face. We had an office in the city that our team went into, so much more face-to-face interaction. So we started to implement daily calls, at least, so we speak at least once daily on a Zoom just like this, just to get on the same page with everything that needs to be done. More sharing of calendars. We use Slack, so the Slack was going much more often than it would prior because those face-to-face conversations aren't happening. I will say that we canceled our lease in the city at this point, just because we're not sure exactly when we're going to go back in, and the team enjoys the flexibility of being able to work from home, whether it's, hey, I want to go get a workout in at lunch, or I have to take the kids somewhere, or I have to walk the dog. So we don't have plans to get an office like we had before. What we do have plans to do is get a small space that 5 to 10 people can go into every day, almost taking that hotel model approach, where we'll schedule out those desks as to who wants to go in a couple days a week if that's something that our employees want. But we've fully embraced this stay-at-home model to a much smaller degree than Britta's team has, but it really hasn't slowed us down much after the first week or two of being at home.
Yeah. Simon, any thoughts as well? I know you're managing and working with teams, across time zones, across, continents. So didn't know, anything that you've had. Obviously been working, hand in hand for years now, with some of that flexible arrangements just due to the time zone issues. Anything you found that's been really helpful for the panel here?
No, I think that, like you say, we sort of experienced that even before all this happened. Your day stretching because you're taking things early when you look east, getting involved with some stuff in London and Europe, and then you're working late into the evening if you're dealing with the West Coast here and even beyond. So that was all kind of normal, and that's sort of continued, right? I think the thing we've had to do as our group experiences that on a normal day-to-day anyway is, the one thing I've noticed is we needed to maintain the discipline of doing the connectivity that Bill just described, that daily interaction, or even just a couple of times a week. You know, we started strong in that environment, and we made sure we did that, and then you saw it taper off. Whether that was, again, some of the COVID fatigue kicking in and people didn't feel a need to be on these calls. But we just sort of, about a month ago, we noticed that frequency dropping and attendance dropping. And so we tried to revitalize that. And there didn't need to be a big, long agenda of things to discuss. I think it just needed to be a place to sort of talk about what's going on, right? Whether it be the work-life balance issues that Britta's brought up there, you know, the family issues. And that's the thing. You go to work and we're in the office together and you're there for the core hours from the beginning to the end of the day, and we don't really have to think about all the other stuff going on outside the office. Here we're managing it all at once. And so I think there's just been that same relaxing of the requirement to all be present at all times. It's just get the job done, really. And if we're grown up and adult about that, and we've hired the right people that we know we can trust to do that as well, then it all seems to be working pretty well. I think but the discipline to keep in contact has been something you just have to reset every now and again, because I think it just tapers off a little bit as we get busy.
Yeah, I've started to check myself in terms of, you know, what's the appropriate communication channel for different things. You know, is it a Slack or a Teams channel? Is it an email? Is it a phone call? I mean, I had just regular phone calls the other day. It was great. Granted, I didn't have face-to-face, I didn't have internet, but I had a cell phone and I was able to just call people. And it's refreshing. It's a little bit different. So like, how can you change it up a little bit to get rid of the mundane, you know, repetitive type aspects? I found that's been a little bit helpful from my team's perspective. We've got about 5 minutes left. There was one other question that came in. We'll touch that. And then if there's any other questions, please submit them. And then we'll kind of do a little quick wrap up here. But Britta, the last question was also directed towards you, but really more so around other companies looking to implement electronic payments, virtual mailrooms, you know, some of the other aspects of, you know, how do we digitize historical, you know, manual process. So they're looking to see kind of, you know, beneficial tools that other mutuals might have used. So Britta, start with you, and also the others, you chime in afterwards, because I know you do a lot with looking at, you know, just physical processes and how do we digitize those. But Britta?
So let's see. We started looking at electronic payments even before the crisis hit, and initially we viewed it as a customer experience initiative. We were looking at it specifically for first-party claim payments. Because if we could get the money in people's hands faster, especially when things are stressful for them, we saw that as being a big benefit. What we have found since then is that there are third parties available who can even produce the paper checks at the same or less cost than we're doing it. You know, there are several different benefits to moving to the electronic payments. Yeah, and then of course, you know, when you look at not having to staff, you know, if you look at not having to staff a mailroom, I think you're you know, you're looking at your business continuity and disaster recovery kind of benefits as well. That's not a place where we're going yet, but you know, there are different benefits. Mm-hmm.
Yeah, I know from a mailroom perspective, there's a lot of mail that just shows up anyway. So it's tough to virtualize something that is going to exist regardless. A lot of clients have, you know, moved everything to some sort of digital communication, you know, and or online and, you know, online portals for, you know, the hosting and housing of a lot of information. So we've noticed that as well, which is, you know, kind of, you know, accelerate some of that push to cloud for some of the customer facing portal pieces as well. But yeah, I don't really have much to add in terms of, you know, digital payments, or especially not in the virtual mailroom. That if I find one, I will definitely let you know. That would be fantastic. But no, awesome. I think we're right around time. If there's any other questions, I believe our contact information is out there. Please feel free to let us know, or if not, maybe we can shoot something around to the registrants here. I can talk with Andrea. But appreciate your time. Thank you all the panelists. It's been great. Ken, didn't know if you had any wrap-up words here.
Yeah, thank you, Phil. First of all, again, thank you, Britta, Phil, and Simon. Excellent presentations from all different perspectives. The presentation we just heard today could apply to all the kids that are now going back to school, either in a hybrid or completely virtual model. They are facing the same issues. I have a junior now who's facing the same issues of being on Zoom calls all day. And how do you learn from that and best practices? So thank you very much. So what we're going to do now is take a 15-minute break. Unfortunately, get Phil back for another hour to talk more about the traditional cyber and some of the regulatory issues dealing with cyber. So we'll take 1 hour break and we'll be back at 2:15. A 15-minute break. We'll be back at 2:15. But again, thank you to all of our panelists.
Pleasure.
Thanks, everyone.
All right, well, welcome back to the PAMIC Financial Management Seminar. We've got one more presentation, and before I get to that, just a reminder, if everybody could, those that need CPU, just a reminder, make sure you're answering the question. So for our last presentation, again, we had Phil stay on. Phil Schmoyer, again, a senior manager from Baker Tilly out of our REIT practice, which includes risk, internal audit, and cyber. And he'll be specifically now talking about cyber and some of the regulatory updates regarding cyber. So with that, I will turn the program over to Phil.
Awesome. Thanks, Ken. Yeah, so appreciate everybody staying on with me here. And now as I have technical difficulties as soon as I share my screen, but I appreciate that. I should be good to go here in a second. Yeah, so today we're going to talk a little bit about cyber. And knowing the audience and that we're not technology people, everybody here, I'm really going to try to keep it high level and focus more on kind of, what's happening with cyber regulation, what's happening with the state adoption of the NAIC model, how are different companies, different states approaching the examination process and how to prepare. Also kind of some of the considerations of, that COVID is bringing into light. So as Ken said, this is me. I am senior manager with Baker Tilly, been here for, I can't even count the number of years. Been with so many different predecessor firm names. I got a little collection of coffee mugs on my mantle at home. But I lead our regulatory information technology practice, working with a handful of states, including Pennsylvania here, local, and across the country. So hopefully we'll be able to shed some light. And I'm going to do my best to monitor the QA at the same time as presenting. So if you have any questions, please feel free to throw them out there, and we can go back to and or talk through things. So today, wanted to keep keep things front and center, keep things a little bit lighter, but also kind of focus just on the highlights of what the NAIC model is. Not dive into all the weeds that we have going on with the NAIC model, and really candidly, there's don't tell the regulators I said this, and I'll deny it until they hit the playback on me. There's a lot of fluff in some of the sections of the NAIC model, and it's really there to define things, to help you understand what it is I need to report and when, and or to who. But really kind of the blocking and tackling of it is really captured in a couple pieces. So touch on some of the highlights there. Understand from a statewide or a national perspective, who's adopting it, who's performing exams on behalf of it, and or other cybersecurity regulations, like what's out there, what do we need to keep on our radar, and how are we best to kind of do that in a one centralized model. Also looking at a little bit about some of the emerging challenges, emerging trends from COVID. How are some of the remote work and work from home things that we just talked about in our prior session, how are some of those impacting cyber threats? You heard Britta mention some of the phishing aspects and some of the the upticks in vulnerabilities that we're seeing. Try to put some light around that, some considerations that we can share with our IT auditors in terms of what we should be looking at to make sure that we're secure and safe. So we'll kind of close with some of that, and obviously anything that you'd like in terms of additional content, throw it in the Q&A, and I'm an open book. So without further ado, what's the NAIC model? I think I was here last year talking about the details and some of the specifics behind it. Today, we're just going to touch on the highlights. So the way I view the NAIC model, you look at the red text, and you're looking at some of the core things, and really everything else I mentioned is kind of that fluff. And this is what I mean by that, kind of the title, the purpose, intent, definitions. It has to be confidential. Some of it has to be there, but it's nothing that a company is really going to be too concerned with in terms of how we're going to implement and how we're going to, make sure we're secure. Really, Section 5 is all about, investigating, and then Section 6 is all about notifying in the event and or when a cybersecurity event happens, and all of those are defined a little differently, throughout the different states. From an information security program, you can see the A through I down on the right. Really, what is happening is we take all of the different components and break them into their own requirements of a program. And then the program is, consisting of multiple policies, procedures, standards, and then ultimately the controls. So how are we assessing risk? How are we managing risk? How are we making sure that our control environment is secure? So really the bulk of everything that is needed from a state requirement and regulatory perspective is kind of bundled into Section 4 and kind of pulls out down here. What the plan was for, I'm sorry, forgot that there's linkages across all of these. I mentioned earlier, and everyone here is familiar with the New York DFS reg, been around for a while. The NAIC model mirrors pretty closely to some of those, but it's not one-to-one. There's some different nuances in terms of how things are classified and described, and or how it's kind of constructed. But we'll talk a little bit about some of those. But there's call outs within the NAIC model to those regs. There's other emerging regs as well. I think California CCPA from a privacy side. There's some others up in Massachusetts, which we'll get to in a little bit, in terms of some of the other privacy pieces that they're looking into. But there's specific call outs to two of them. So if you're complying with some of these items, I know Pennsylvania hasn't fully adopted the NAIC model yet. But if you're already complying with some of these other things, doing some sort of a gap assessment of what's required and versus where we are is probably pretty early and pretty easy to do for how are we preparing ourselves to be compliant with the emerging regs. So the couple of pieces that I wanted to talk through today are really around that information security program, the risk assessment, the risk management framework, some of the third party and or board oversight, which is probably more applicable from a governance perspective on the call today. And then the incident response planning. We heard Britta mention in the last session, just in terms of how critical a response plan or a plan really of any kind is in any situation. We saw with the pandemic, when having a solid business continuity plan, enables you to respond to the challenges of continuing operations. Same thing with an incident response plan, which we'll jump into in terms of what the regulators are looking for, and what's good, what's good enough, and what's kind of the golden ticket of what we should be striving for. Information security program, and as I walk through these, I'll tell you what it is, and I'll tell you kind of how some of the regulators are looking and or considering some of these things. But really, when you look at the information security program, this is how you're managing your risk. The way they look at this is, and how we all look at it, is kind of the overarching program that's inclusive of a lot of the other elements that all kind of bundle up and say, like, here are the things that we're doing to make sure that we're protecting our policyholder, our constituent data. So making sure that we're keeping it secure, we're keeping it confidential. If it has to be classified in terms of what is what, whether it's public information, private information, confidential, et cetera. And then how are we restricting those information sources and making sure that it's only on an as needed or a least privileged basis. Looking at what are some of the external threats, what are some of the things that are out there, as we mentioned, the phishing aspects that are upticking. Like, how are we managing the emerging risks on a go-forward basis? The thing with most of the state-based examinations that you'll look at on the 5-year cycles, they look at the 5 years, but they're shifting to be more perspective. They're all looking forward. And so that's where this program concept is one of the more critical things, where it's really looking to see, based on what you do day to day, your control structure, your operations, are you well structured to manage risk, not just retroactively, but proactively? Are you looking at things that are coming up? Are you emerging trends, emerging risks? Not saying you need to predict COVID and pandemics, obviously, but are you considering, okay, as that did happen, what are the additional security concerns we might have from going to a remote workforce, to shifting everybody virtual? Do we have additional security risks, both from a network perspective, but also from a data perspective? Can people transfer data a little bit easier when you're working from home? Could we lose information? Some of these additional items doesn't necessarily need to be called out all the time, but the whole concept of this program is that it's an evolving, periodically reevaluated concept. Whereas we do it once, but then we continually kind of evolve the program itself. And so what the regulators are looking for here, and really what's best in class for some of these things is you have a living, breathing program, not just a document that sits on the shelves. Something that you're able to utilize as your company grows and scales. And inclusive of this are going to be all of the other items that we talk about. So when you think about the risk assessment, the risk management, the board oversight, the third party, what's not on here is some of the other things that we talked about when we had the previous slide, in terms of policies and procedures and how we're managing those things. All of those bundled into that program. And that's where really the key highlights of that program and the encompassed documentation that's supportive of it. The most critical piece here, and kind of what we were just talking about a little bit in terms of the risk assessment, is that this living, breathing thing. The way we see some companies from an examination perspective do risk assessments is once a year. And then if there's any events that have changed within the year, it doesn't matter. They come back and they look at it again next year. Based on the definition, that is a periodic reassessment of risk, yes. However, is it the best use of a risk assessment and risk management framework? Probably not. If you implemented an entirely new policy administration system and haven't reassessed your risk, are you sure you still have the same risks? Or if you took your entire workforce out of a physical building and put them virtual across multiple counties, across multiple states, do you have the same risk profile? If you change company names, and now your name or your domain name or some of the other aspects are a higher target based off of your affiliation with other companies, et cetera, do you still have the same risk profile? So there's a lot of other factors that can tweak or require a reassessment of risk. What we see in a lot of exams is your standard one time a year risk assessment process, and that's sufficient for most examiners. What it's missing sometimes is the comfort level internally and or to the board and or to external third parties in terms of how we're managing that program on a proactive basis. So some of the key pieces here, I'd say, look at your employees, the risk of employees in terms of where they are, what they're doing, what information they have access to, how some of that access and transmission is changing, whether or not it's fully encrypted internally, whether that's now moving across boundaries, whether that's now fully remote. Are they through VPN and encrypted connections? Some of the other aspects that have changed as a result of moving remote, as well as multi-factor authentication, which is one of the big risk management pieces we'll hop into in a second. But really that employee training, the management, and kind of the information classification pieces are some of the critical elements to reconsider on a regular basis. So there's no kind of full program, as we talked about on the far left here. There's no full program without a risk assessment, and there's no program if you're not managing the risks that are identified. What the regulators are looking for as we emerge into the current and or the future with this remote status and a lot of the other pieces that are happening is how are we managing all of this risk? We did the risk assessment. We reassess the risk on a regular basis. We have a solid program. But what's included in that program? What are some of the management techniques that we're doing? What kind of access controls exist? Physical security may or may not matter at this point. Obviously, it matters from a data center perspective. If there's nobody in any buildings, maybe it's actually more of a risk. If there's information sitting on the servers or on computers, or there's open ports in your office buildings, but there's nobody in the office building, could somebody gain access easier to your office building and be able to plug direct into some of the information that's there? Emerging trends and emerging things really shift what that risk management profile should look like. Normally, we've got people in the office every day. Who's going to break in and stick an Ethernet cable into a port? Well, okay, now no one's in the office every day. Is it easier to walk into a building that we own and plug something in? All we have to do is break one lock. So you start to think about the different pieces and how we're managing those risks. Encryption is different. We used to have information sitting within our network. Everything was connected here. Now everything's going over VPNs, and or everything's going over virtual desktops or remote desktops. There's a lot of change that's happening in terms of how information is shared and transferred. Do we have the right controls in place? Are we managing the risks that we previously identified and or refreshed in the most appropriate fashion? There's a lot of these emerging threats and emerging things that are happening. As we get into some of the statistics around some of the COVID shifts, the FBI reported an 800% increase in cyber threats during the month of April. Immediately after everyone went remote work, the exponential kind of increase in the threats that were out there are really causing everybody else to take a step back and reassess their risk and reassess that management program. Are we as secure, or are we appropriately set up to manage a remote workforce? So along with that, comes some of the oversight pieces, and the board oversight is one of the things that's always been here, and really I'm noticing more prevalence in terms of exams, especially coming out of certain states up north from us in Pennsylvania. And they're really focusing a lot on the oversight from a governance perspective, both internally at the company as well as from the board. The requirements are really more around that there should be a cyber type report provided to the board on an annual basis. Normally, you're documenting that through either a written report from the CISO that goes up to the board, or there's a board presentation, there's minutes captured, etc. Really what we're noticing kind of as the trend in the regulation, and what we're looking for, not just us, but what the regulators are looking for, is an engaged dialogue, and not so much the fact that there's a report going, but what's included in the report. I've seen some really awful reports to the board, to be very candid. Some that have literally just said, our cybersecurity report, we have no incidents, and that is pointless. Like, we get it. There's no incidents, but the board isn't gaining any understanding. There's no kind of true governance aspect over that. It's really just we're checking a box to satisfy requirements. What we've noticed is happening a lot is the board getting involved in the risk assessment process. Not so much the activity of performing the risk assessment, but reviewing the outcome in terms of okay, here's the current situation. Here's what it was prior. Here's the trend and how it's changed. How is the board getting comfort over that we're appropriately considering the items that have changed, and obviously they're in some of those strategic conversations as well, and so they'll be a little more attuned to looking beyond or seeing the forest through the trees in terms of what's the bigger picture, and are we considering all the necessary risks. Some of the other items around third-party management as well. COVID and even pre-COVID, there's been this mass exodus, I'll call it, to the cloud. A lot of companies, shifting and transitioning out of the on-premise data center into the cloud. All of the data security, concerns with that are still prevalent of what you'd have locally. It's just now it's hosted by a third party. So how are we getting comfort over their controls? A little less about, how are we implementing our own, but how are we, verifying and or auditing others? And so understanding, what those arrangements are, what those third parties are doing for us, how are we able to kind of, make sure that we're in line with what the expectations are, but also that we're appropriately picking the right vendors. Our vendor management process is appropriately configured. We're thinking about the right risks, but then also that we're managing those vendors in an appropriate fashion. That we don't have 5 telco vendors, telephone vendors, when 1 or 2 would do the same, and we're overpaying for the other 3. How are we appropriately considering our vendor management process as a whole? There's a lot to go with vendor management. It's kind of why it's carved out in its own. The oversight of the third parties, the NAIC and the New York Department of Financial Services, both kind of in their regulatory guidance, gave additional time to be able to implement some of these regulatory oversights. As you can see on the effective date note on the bottom here. And just for FYI and full disclosure, I purposely reused some of the slides I used last year. So you can see that these are the same things, and really it's just the heightened focus on some of these items. The oversight of the third-party providers is, in my mind, one of the more critical things that all the regulators are looking for. And really it's because of the spread of vendors that's happening now. More and more companies are engaging with more and more vendors, creating more and more data that's either being stored locally or with vendors. And really that ownership of data and security over it is really where there's a lot of concerns throughout the industry and candidly throughout all industries, just in terms of the sheer volume of vendors that are out there. You get a vendor for everything now. Whereas before you might have had a couple strategic partners. And I think some larger firms are starting to move back to the strategic partner relationships. But a lot of people and a lot of technology is, created in startups now, where it's, I need this thing. There's 5 vendors that do this thing. You just go pick one of the 5 and implement it. It's created this kind of web of what technologists will call shadow IT. Whereas, throughout the organization, there might be 1 or 2 applications that are being, hosted and run and managed by departments that aren't technology people. And the vendor due diligence is done by those departments in some instances. And it creates the additional opportunity for vulnerabilities. And so really that oversight of third parties and, taking that vendor inventory, if you will, of all vendors across the organization. What was the vetting and due diligence process up front? What's the continued vetting and due diligence process on these vendors? And who owns the relationships? I know we're working with a company right now helping to enhance their business continuity plan. Obviously a little bit late after COVID happened, but notice they worked through it pretty well, but want to be more prepared in the future. One of the things that has come out of there is just a clear disconnect on who owns vendor relationships, and kind of one of these going on, various people pointing to various other people. And the concern there is that nobody is actually owning that vendor relationship. And the only people that own it are procurement, that when the invoice comes in, they cut the check. But really there's no due diligence being done. And candidly, there's a couple vendors that no one is using anymore, but they still pay for it. So really taking that vendor inventory and looking into, who's owning what are they doing for us? Is that the appropriate solution? And then ultimately, are we securing our data through that? Are all critical aspects and stuff that is getting heightened focus from some of the regulated exams. And the last piece that I'll touch on, obviously isn't all encompassed, but it's the highlights. The incident response plan. This was a kind of a hot topic early on as well, and really something that I'm noticing more exceptions coming out of exams with, in terms of the actual content on the incident response plan. As you see here, the 6 different bullets down below, in terms of what the NAIC and the DFS has called it out as well, just in terms of the things that should be included. I'm not going to give my thoughts in terms of whether or not I agree all of them need to be included, but I think they all need to be included in some aspect. But I will tell you, there are some exams that I've seen, not that I've conducted, but that I've seen, that it's basically a checklist of, do you have every one of these items included? And if not, then we have an exception. And I'll get to in a second what's happening with some of those exceptions. But really it's looking at, is there an internal response process? Yes. Are there goals included in the incident response plan? I'll be very candid, and most of them I see do not have a lot of goals. The goal of the incident response plan is to respond to the incident. Yes. A lot of them are looking for timelines and, how quickly and or to who and or what does success look like if we do this correctly. Roles and responsibilities and incident response plan can't have enough of that. Think of it as a crisis management plan, and obviously, in COVID or immediately preceding, as we all kind of went remote, having the necessary information and people aligned to respond, aka notify all the employees, let them know everything is okay. Here's how we're going to work through business. Same thing happens with some of the roles and responsibilities on the incident response plan. How can we, make sure that we're clearly communicating, externally and internally, as well as sharing that information with people. So a lot of these different pieces should be included, and some of them I notice aren't in a lot of them. Roles and responsibilities. Sorry, it was a helicopter that just flew right by the window. It was weird. A lot of them, the roles and responsibilities are clearly defined, but timelines of communications aren't. So in terms of, are we going to be able to meet our breach notification guidelines by state based off of what we're looking to do? I noticed a couple of incident response plans that had the timelines and everything itemized out that were actually in direct contradiction to breach notification laws in that state. Whereas if the state said 72 hours, they were going to respond and notify in 128 hours. It just doesn't make sense. So making sure that you're familiar with what those breach notification laws are, looping your legal department in and kind of having a solid plan of attack going forward is kind of our recommendation on kind of what should be included in some of that. So where are we at with some of the cyber regulation and some of the adoption aspects? So as of kind of mid-June, which was the last NAIC published version, and by the way, this information, most of the information in terms of what's in the dark green and the light green comes directly from the NAIC website. And there's a map out there for what's the adoption, and then there's some other considerations that I've added just based on personal engagement and working with different states. But there's various different obviously stages of where companies are or where states are in terms of adoption, and then there's a lot on here that are being considered or are being kind of moved towards the docket per se. And just for kind of context, all these different state adoption, the NAIC model, they'll have to be enacted into a statute or a law through all the legislatures within the states. So some of those are sealed off a little bit in terms of knowing what's going to be on the docket and where we're at. So there are a couple other states that I know just from talking to people that are moving towards adopting this. It's just not reflected here. But as you can see, some of the early movers on this were South Carolina. Obviously, the governor or the commissioner there was one of the champions behind the NAIC model. New York has their own, so it's in the white. It's got an alternative, the Reg 500 up in New York. You see through the Midwest, there's kind of a trend of being adopted. Minnesota, Wisconsin, and Illinois are all under consideration currently. Michigan, I believe Ohio and Mississippi all made a December 2019 push, and they all passed it within a couple weeks of the end of the year. Just kind of get it done type deal. Those are all implemented, and what I'll tell you now is for a lot of the green states you see, which is the NAIC model adopted, the implementation or the effective date is not effective in all of them yet, but we're approaching that timeline. But all of them look almost identical. If you do a compare and contrast with the different states' regulations versus the NAIC model itself, absent some reorganization in terms of how their statutes are written, or some of the nomenclature in terms of section A.1 versus section 1.A. Some of those are a little bit different, and some of the organizations are a little different, but the content and the requirements themselves are pretty consistent across all states. And then obviously New York has their own reg, which has a mapping that can map up to the NAIC for pretty consistent. And then California, CCPA out there from a privacy standpoint, in working with some of the California regulators more recently, they're starting to consider doing examinations for compliance with CCPA in the near future. So if you have a domicile company in California within your group, that could be something coming down the pipe, but I haven't really seen anything happen right now. We just wrapped up an exam of a multi-state group, Pennsylvania and New Jersey company, as well as one out in California. And we did a kind of a light kick of the tires on CCPA, but it didn't go to the depth of compliance with the full reg. Flip side of that, New York and Massachusetts are doing full-blown examinations, for compliance with their regulations. So in New York, it's Reg 500. It's regulation 500 or 23.500. In Massachusetts, there's 2 statutes actually, or 3. Massachusetts General Law is 93I and 93H for the implementation aspect of the privacy laws and or data security. And then there's a consumer implementation law, Section 17, that kind of puts all of the components in place. Mapping that to the NAIC is virtually the same as well. So the nice part is from an interstate perspective, a lot of the components and requirements that we have been talking about and we've been talking about for years are all the same across the board. I will say that exams are happening. They're happening on every regularly scheduled state exam on behalf of New York right now. A compliance with Reg 500 is a component of that. So if you do have a New York domiciled entity, expect that on your next exam. If you don't have a New York domiciled entity and you're just a covered entity in New York, I've not seen New York do any exams of just covered entities that they're not active in a state exam of that company. Now that could change. I have not seen it thus far, but obviously that's not to say it hasn't happened. What New York has started to do is they have issued one of the first observations and enforcement actions coming out of the First American Title Insurance Company out of Nebraska, which also has multiple subsidiaries. They're essentially the title insurance company across the country. There's others obviously, but they kind of have one of the staples in the market. But domiciles all across multiple states, kind of a conglomerate of different title insurance companies throughout the country. There was a breach, and there was a lot of information exposed, according to the DFS's initial investigation. And they started to move through. I believe there's a hearing scheduled for October on this, based off of all the findings. But really what was said was that the DFS went in, they filed a statement of charges against First American Title Insurance Company. They alleged that there was an exposure of hundreds of millions of documents, millions of which contain sensitive information. There are some records, if you go to this website and then some of the others, if you Google it, you'd be able to see, some of the other items that, popped up and kind of, it's all public. That's why I'm able to share this side of it. But there's some back and forth going on in terms of what was really lost and what was lost by, different states, states that have requirements and states that don't have requirements, et cetera. So this is still shaping out, and we're still working to see what this looks like. I know from a company perspective, an insurance company perspective, not First American itself, but more holistically to the industry, this is something that's on the radar and being watched. Principally because it's the first kind of action that's being brought against any company outside of the Anthem breach and Premier breaches and some of those other ones, but for compliance with a regulation. It's not necessarily a breach fine. What they're saying is that the charges are being filed, that there's violations of the regulation itself. And so what the findings were as a part of the exam, was that their failure to follow some of the policies, misclassifying some vulnerabilities, not performing some of the penetration testing, a handful of different items, and it all kind of aggregates up into not following through on some of these things. And what the department is saying is that these are violations of what has been stipulated in Reg 500 as you must do. And so they're coming in and there's action being filed against them. I've had a lot of questions from a lot of our clients asking about, well, how did this come about? Was it through a normal exam? Are the DFS going to start having actions against all companies that have vulnerabilities identified through their exam? Can't speak for the DFS. I know this was a result of a breach that the First American reported to both Nebraska and to New York, as well as a handful of others. And there was a coordinated, targeted examination that was performed on behalf of those states for this company. So it did not come out of a normal scheduled exam. It came out of a targeted exam that was, explicitly focused as a result of the breach that happened. So it's a little different than what would be normal in the course of day-to-day regulation. However, I don't know what the future will hold. With some of the fines and or actions being brought against companies for failing to comply with the regulations, essentially, because that is what was called out here as what's being being considered is a failure to act on behalf of them, a failure to comply, not necessarily the breach itself. So a lot of insurers are watching this. That this could be kind of a precedent being set. The way in which it was enacted or began is a little bit different and outside the normal scheduled exam. So still something to watch. The link is down here, but if you Google anything around it, you're going to get a handful of articles related to it, as well as the press releases. And you can see in the press release itself that's down there, the full report of what the DFS saw and what's going to be discussed at the October hearing. So still in the works, but something that a lot of companies are mindful of and trying to monitor. So how do we prevent ourselves from being on the headlines of the New York Department of Financial Services website or the Pennsylvania Insurance Department's website or any others? Probably getting more into the technical weeds here. And so I'm going to keep it high level, touch a little bit on probably the governance and how we implement information security. And obviously, certainly something to take back to any of your technology folks. Obviously keeping this more from a financial perspective, but some of the key building blocks from cybersecurity regulation is I view it as the risk assessment and management program that we talked about earlier is that underpinning, that foundation of the house, that you need to be solid, you need to be strong, and that can't be a one-time deal. From there grows this vendor risk management and vendor oversight component. How are we managing our vendors? How are we managing our risk? How are we overseeing them, making sure they're delivering what needs to be delivered? And then also on the information security program, how are we internally managing our information? How are we securing it? How are we making sure that we're able to respond in the event we need to respond? So how are we managing our vendors and how are we managing ourselves? Within that, we've got governance, information security implementation, and incident response. So within our governance concept, that's kind of where we come back to that program gets broken down into policies, procedures, standards. What types of data do we have? How is it classified? Who are the people and how are we overseeing our people? Both internally, but also from a governance down. How are we engaging, with some of our boards, executive, senior leadership teams? How are we speaking the same language when it comes to cyber? And then from an internal employee perspective, and probably one of the most critical right now, knowing the kind of out of sight, out of mind of some of the employees working from home. You don't walk the halls and see signs that say, don't share your password. Phishing is a thing. You don't see that when you're walking your walls at home. At least I hope not. But a lot of the items are, how are we making sure that our employees are still, aware of security awareness training, and just kind of the general awareness of what an attack might look like. That's one of the more prominent things right now is the phishing attacks that are coming out. So how can we make sure that we're providing our employees with the necessary information to be able to identify and kind of respond, and basically not click the link. Don't put your username and password in there. Funny story for a second. I just got an email earlier this week. I'm moving, so my emails are kind of spotty here and there. I got an email. It looked like spam. It came from some version of Amazon. It was giving me a gift card of some sort. I was like, this has to be, spam. I forwarded it to our IT department. I come to find out our firm is giving all of our employees a little bit of money to buy, supplies to work from home since we're here for the rest of the year. I basically took the gift card they sent me and sent it back to them. But it's kind of one of those things where, if that would have been a false link and I clicked it because I wanted the money, put my username and password in because it had the Baker Tilly logo on it, I could have given all my information away, and then all of our clients' information could have been at jeopardy. So it's some of those things of just making people aware of what's out there and what to do if you do identify something. Some of the other pieces around information security, obviously not going to go into the weeds of how, but really some of the whys. This multi-factor authentication, something something you have. With all the remote workforce, there's a lot of, the ability for password crackers, for, third parties, for, overseas types of attacks to happen. And passwords, you can make the most secure password you want. At some point in time, with enough computer bandwidth behind it, it can be cracked. So it's really, something but it's also something you physically have, or it sends a message. All the banks are moving to that in terms of sending messages to your computer, your phone, to re-authenticate. And or Google, I try to log into a Gmail account, makes me go into a different, Google app to click a button. Something that kind of gives that secondary control, secondary piece. Access security and administration has always been a key. Really just kind of, concept of least privilege. Only give access to information that's needed to enable your business. And really no need to give the keys away. Encryption, we've noticed, has been kind of one of those issues for some companies. Encryption is becoming less expensive and a little bit easier to administer. And it's also becoming a little bit faster, just in terms of, how much bandwidth and kind of computer horsepower do you need behind it to be able to unencrypt something fast, to be able to do something with. With everyone working remote and all of the VPN tunnels that have been created, there's a lot of just various different types of encryption going on through remote desktops and VPNs, and the data transfers, and whether or not it's sitting locally, data at rest, and whether or not how that's encrypted. There's just a lot of different components that are going into that right now, and really it's kind of, in my mind, one of the things that absent a password being stolen and having the authenticated credentials, some of the brute force things are being stopped through enhanced encryptions. I've also noticed some machine learning encryptions almost, whereas it's constantly evaluating and upgrading some encryption methods based off of some of the things that are happening to kind of stay ahead of the game on certain things. Application development and security. As we heard in the last session, application development is kind of slowing down, but what's not slowing down is robotic deployments. A lot more robotic, process automation, decision automation, flow automation, the various different intelligent automation components that are going on. There's a lot of push to more digitize the business through automations, and in doing so, there's an entire different security suite that goes with robotics. Both from all these pieces, really, from a governance standpoint, bot inventory, access administration, and access credentials. I have a whole hour on kind of robot security in terms of how we're securing them and making sure that they're making the appropriate decisions when they need to, and that they don't have access to things that they don't need to. Obviously they are a person, but they are processing information so much faster. So their credentials are equally as important as a regular person. And really kind of the way that we look at this cyber reg is, think internally and think externally. On the vendor side, I think we beat that one up pretty good earlier on, but really just making sure that we have the right risk management program in place related to our vendors. One of the key things in my mind with this whole diagram here, and candidly, it's the bottom 2/3. Obviously the risk assessment and management program is critical, but then that middle layer, how we designed the appropriate programs for both internal and external management of our risk profiles. And that vendor risk management program is critical for that, both from a due diligence upfront as well as an ongoing perspective. So what are some best practices? How does this look? And I'm not going to spend a lot of time here, really from an exam prep perspective, which is really what I wanted to get to on some of these. The governance, the risk assessment, and then the documentation. Making sure that your senior leadership teams have a clear and consistent message related to how we're governing cyber and governing data security. On the risk assessment side, making sure that it's not a let me go get that document from 2019. It's here's the latest version we have, and hopefully it's within 2020. but also that document is being reassessed and revisited. So thinking the governance into the risk assessment, that we're governing how often we're assessing our risk. And then the risk assessment kind of flows back into the governance of now we're governing how we're implementing the controls around that risk that was identified. Think of it as ERM, it could just bundle right into that. And then the documentation piece, which in a lot of exams I know is kind of a critical piece that there's a lot of information that's collected. And so really some of the things that we've seen be very helpful is store stuff in a central location. Create some sort of an evidence locker of, all the different things that we're doing. We've got our cyber program, we've got our policies, we've got our risk assessment. Here's how we got to our risk assessment. Some of the meeting minutes, the discussions, the diagrams, the conversation points that have happened. Truly understanding your network, your data, what's there, where it's going, all the other aspects of, how it flows in and out of different systems, who has access to it, how are we securing it, a lot of those things. One of the most critical things in my mind when I start any type project with any company, really of any size, what's strategy look like? What are we doing today versus what are we doing, 3 days from now, 3 to 5 years out? What are some of those strategic initiatives, roadmap items that are going to be transformed into the business? And are we appropriately considering risk at key milestone stages? Are we considering it up front? Are we looking into the different components as we're building out some of these initiatives? Call it new system development, call it new policy administration system, call it moving to the cloud, whatever these different keys are, as we're digitizing all of our businesses, making sure that we're appropriately considering the plan. And then that is supporting a lot of the risk assessment discussions that are happening. Also the discussions that are happening at the governance and board level. Some of the other items here are just things that will be kind of asked for and looked into. But it's really kind of, pretty consistent. I'll give you a quick tip. Some of the items that are popping up on some of these exams, or I guess really more the trend with the NAIC is to not recreate the wheel. It's been the trend, or supposed to be the trend for a while, but it's really getting heightened focus. The way that the NAIC works with regulating their states is the assessment, I'm trying to blank on the words, with the accreditation review. As part of the accreditation review, there's certain standards that all the states should follow. And what they're looking for is not to recreate work that's already been done. So leveraging the work of others is being emphasized heavily at the NAIC. So what does that do? Speeds up the exams, reduces costs to the insurance companies, doesn't have additional burden and effort, just needed all around. What that does from an insurance company perspective as well is, if you're able to evidence the fact that you're already doing certain independent reviews, SOC reports, internal audits, periodic assessments and checks, the idea is that all that information is going to be leveraged on your exam by your examiners. So you're able to kind of reuse some of the information that's done. So it's kind of dual benefit. It's a benefit for you because you get some of the insight and information from validating your risk and control frameworks. But then you're also getting the benefit of not kind of paying for it twice. You're not actually doing it 2 times. Your teams and the individuals responsible for some of those things doesn't have to do more effort or double the effort. So what are some of the emerging risks? What should we be doing about it? So there's a handful of cybersecurity headlines that have been coming out through through the COVID-19 pandemic. Some are saying that it could be the largest ever global security threat. I'll call it to date. They didn't say to date because we don't know what could be a cybersecurity threat. I've seen iRobot, so you don't know what's coming, but it's the largest ever to date global security threat that's out there. A 238% increase in cyber attacks. This was against banks, but there's also similar, maybe not a similar percentage, but a similar uptick across all of the organizations globally. 41% have said that their companies are utilizing best practices to ensure that secure workforce. There's a huge shift in terms of securing the infrastructure internally versus securing the employees and their homes. There's a lot of connected devices in a house. There's not as many connected devices in an office building for the most part. But think about all the Google Homes, the Rings, your Alexas, all of the connected devices at home that are on the same network as you, as you're sitting at home, watching this webinar. So all of those devices are a lot easier to hack than would be a physical building that you're sitting in, plugged, hardwired into a connection. So there's a lot of additional, consideration being given to, what's different about working from home from a technology perspective and kind of the endpoint footprint perspective than it is just being in the office and engaging in the same work. Back in May, there was an article that said 49% of businesses expect to experience a data breach due to the remote workforce. It's not we're preparing for it, but as we expect that there will be a breach. 50% of all companies, during that survey from Barracuda, and almost half of them have faced at least one major threat, coming up from COVID. What we've noticed is, and Britta mentioned in the last session, I'll echo it again, the phishing has been a key thing. A lot of just kind of some of the network monitoring and network configurations. Some of our clients have noticed just an increase in kind of brute force attacks happening, just with the thought that if everyone's working remote or you're on a little bit reduced crew, is there an opportunity that this isn't going to be captured or caught? The monitoring piece is decreasing a little bit because everyone's working from home. Can we kind of sneak one by? And so there's an uptick in kind of brute force attacks we're noticing in some companies as well. The FBI, I mentioned that stat before, but 800% increase in reported cyber crimes, which is just a staggering percentage. It's incredible. And then the number of cyber attacks that are growing, few hundred daily to over 5,000 one day alone. Just the sheer volume of some of these items that are coming out. It's kind of beat a dead horse talking about the same things. So what can we do about that? What we've had some companies ask about is like, how do we assess the remote work environment? What should we be doing? So we kind of broken into the people, process, and technology piece of, how should we be making sure that we're still able to do things? What types of IT audits or IT kind of checkpoints should we be having on some of these things? And on the people side, continue to validate that your users can still conduct operations and that there's adequate security when they're doing that. So pre-remote workforce, how are they doing things? Post-remote workforce, how are they doing things now? Are they using the same processes? Are they using the same systems and they have the same users? Do we have to onboard new users? Do we have to outsource different things to different vendors? How are our projects being administered remotely? Did our projects take a pause, or are they still moving forward as expected? Inspect some of the change aspects, some of the change records. This is more on the technology side, but are we considering the right security controls when we're working remote? Technology-wise, remote printing. Wouldn't have ever thought remote printing, but when you were logging in this virtual check printing world, or not even seeing the checks coming out of the printer itself, how are we validating that the devices are secured, that you can't hack into the device, but that also that the physical devices, the physical materials, not only are kept secure, but that are accurate. Obviously there's vendors out there that are doing some of this, but also if we're doing it at home, how can we make sure we're combating some of the fraud that possibly could happen, with a remote, an individual working from home by themselves, versus people being in the office and a little less of the oversight from a personal perspective. How are we securing the physical check devices, with some of the remote printing capabilities? Making sure our firewalls are updated, that they're being constantly refreshed and or enhanced as needed as new things come out. And then anything that's web-facing, any applications or systems that are web-facing, making sure that we have similar controls in place around those. From a process side, there's a lot. There's obviously the security and privacy awareness training, making sure that our employees, that we're evaluating whether or not they have adequate training, and if not, we deliver updated or better training, making sure that they have the access to the data they need, that they're not handling it inappropriately. Working from home, most of us have a computer, sitting in front of us. Obviously, you're watching the webinar, and you're doing work on there. But how many people might only have one instance of Zoom, for instance? And during the middle of the day, our son or daughter has to get on a Zoom for school. And then that son or daughter is logging into our computer. Are they downloading or sending information? Probably not. But are you doing work on a different computer during that time? Possibly. How are you accessing the information through that other computer? Is that other computer secured the same way? Are there the same types of considerations and controls? A lot of different aspects. I just kind of funny thing to do when you're on a Zoom call, check how many people's names are not their name. If the person's name is, so my name is Phil, if I had a son, named, Bob, if my name showed up as Bob Schmoyer, I'm almost positive that Bob, that person was using, their son or daughter was using that computer earlier that day or the other day. Because they changed the name so that you can see, who it is. So just, I started noticing some of these things where you log in and it's a family member's name that shows up on the Zoom when you're sitting there. But fun fact. User provisioning, user access, making sure that we're still considering the same things. Procurement card usage, P cards, making sure that they're related to actually purchasing things that are needed for your work, not that are needed for your son or daughter or other family members' work from home situation. Making sure that we're actually considering what needs to be considered. And then obviously the cyber monitoring, watching all the different activities. How are we monitoring third parties? Mobile phone devices, the bring your own device concept. There's a lot of people are using those mobile phones at home. Obviously there's some cost and benefit to having a bring your own device, and obviously some security concerns as well, depending on what kind of access you have into the network from that device. So there's a lot of different considerations that we'd recommend kind of taking a look at. So we got a few minutes left here. I didn't see any Q&A come in. Please submit them. I'll happily respond whenever we see it. We've got a couple key takeaways. Sorry, go ahead.
Phil, I just had one question. You were talking about using your personal devices to do work. And so I just wanted, maybe you could expand on it a little more, because when we say work from home now is work from, to some extent, work from a restaurant, work from a coffee shop, work from a park. So are there any additional cyber and security concerns by, I'll say, not working in a necessarily most confidential environment like you might be at home in your home office?
Yeah, absolutely. So a little bit also in terms of kind of who else is there, and so knowing that and mainly Pennsylvania being PAMIC, Pennsylvania is reopening, so there's 50% capacity coming to internal things. So in terms of how many people are out in there, less of a security concern than it would be working from a Starbucks, for instance, in 7 months ago. And if you're working from a Starbucks and you're working remote and you're logged in and doing things, the network isn't secure. You don't have to put a username and password in to get into the Starbucks network. So any kind of unencrypted traffic you're sending could be picked up just by somebody else sitting in that coffee shop. It's kind of when you see a lot of these hacker type movies, and you see some of the things, somebody's sitting in a coffee shop just kind of scanning the I guess the air, just pulling down some data that might be being sent through the network. If it's not encrypted, that is absolutely doable. And so those are the types of things when you're working elsewhere that isn't even in the comfort of your own home. What network are you on? How secure is it? What different types of aspects might be going on out there? Who might be around you? What are they looking for? But then also kind of if you have information up on your computer, other people can see it as well. So if you're working in an environment that isn't something that is secure, if you're working with very sensitive information, making sure you're looking kind of around you, behind you, et cetera, from a physical perspective, but then digitally, be on a VPN, be on a remote desktop, be on something that's encrypted, be on something that's not just a public internet. Any public internet it doesn't even need to be hacked, really. It's open. It's the benefit of being on an open network. But the challenge is from a business operation, and Ken, you're exactly right. Now with more people working from home and or just finding any old hotspot to be able to connect and do some work, especially if you got to get out of the house because it's crazy and we got kids and parents and everything running around. If you got to get out to do something, it increases some of that security concern in terms of who's out there and who's watching what. Yeah, so I know we're wrapping up here. The last key takeaways I had here is just understand and know what your data is. Refresh that risk assessment periodically. Involve others. This is not just an IT problem. Like, this is a financial seminar. The last 2 hours, all we talked about is technology. And I can imagine we come back next year, probably 80% of this will all be about technology. And it just slowly start to encompass, finance and operations will be enabled through technology. Be like the people process technology. It'll really be like technology and then everything else. Where everything's going to be operating through and or with technology. So make sure that everyone is involved in some of these things and prepare for the events. They're out there, they're happening. From an exam perspective, you're pretty good in terms of some of the information that we had. I will make this deck available through PAMIC, so that you have the information when you're considering kind of what's coming down the pipeline from an exam perspective. But prepare for both of them. But yeah, I appreciate the time. Ken, I'll turn it back to you. Thank you all for attending. This has been great for me. Appreciate it.
All right, well, great. Thank you, Phil. I know you've had a busy month and you spent actually 2 hours with us, so thank you so much. It was very interesting. Great job to you and also the panelists that we had earlier today. I know everyone's probably zoomed out by now. Can't wait to get outside. Beautiful weather here in central Pennsylvania. So just a reminder, tomorrow we will start again at 10 a.m. As Phil said, all the panelists and presenters presentations are going to be on the PAMIC website. You'll get a link to that. And again, also thanks to our sponsors. Again, it is tough being a sponsor in these days right now, so we really appreciate them. And also our committee members. We have a really top-notch committee. Got some great speakers that we'll hear from some more tomorrow. And if you want to be on this committee, just feel free to let Scott or myself or any of the PAMIC staff know that you'd like to be on the committee. So with that, I will bid everybody adieu. Have a great afternoon and evening, and we will see everybody tomorrow. Thank you very much.
See you tomorrow, folks.